Hey, this is Phil Denfeld, and it's your Friday video update. So first I want to start out with something I'm actually pretty proud of, and I don't normally brag or anything about myself, but I started a program here at First Heritage Mortgage beginning of this year. And we, many loan officers here at First Heritage, contribute a portion of their commission for every loan they close to Children's Hospital or Children's Miracle Network. And that money goes directly to Children's National Medical Center here in the Washington, D.C. area. And I created the program because I felt like it was important for us as a company to give back to the community, and that organization just does amazing work. And I'm proud to say that I have achieved the first level of giving and been awarded this new award as a miracle lender. And there are a couple loan officers here at First Heritage that have given enough to receive that designation this year, and many more that will by the end of the year. And we're really proud of that and the relationship that we've developed with Children's Miracle Network. So just know that if you send a client my way, I do give a portion of my commission to Children's Miracle Network in the name of the client. And they do get a card to let them know that that's happened, and the response has been awesome, and it's just something I'm really proud of, so I wanted to share that. Now, on to more pressing issues. Where are rates going? Everyone keeps asking me because we had a little bit of a scare, maybe as you might say, over the last week and a half or 2 weeks where rates started to move up a little bit, and all of a sudden people were like, what's happening? And yes, that did happen, and not horrible, but rates did go up, and I want to tell you that I watch it every day, and my impression right now is that we've seen maybe the worst of this latest run, and the bond market is working hard, it looks like, to try to recover and turn the corner, and maybe rates come down a little bit. And we've seen a little bit of that today, and hopefully we'll continue this trend into next week. But overall, I did see a report earlier this week. After the Fed meeting this week, they came out and said that they are going to stop their bond buying by the end of October. They tapered another $10 billion, and there's $15 billion left in bond purchasing. And if all continues to go as expected, that by the end of October there will be no more Fed buying mortgage-backed securities, which has helped keep interest rates low. Now everyone might think, uh-oh, here we go. But actually, a lot of news is that expecting that that's not really going to have that big of an impact. People have known this is going to be happening, and there's excess demand or plenty of demand in the private sector for mortgage-backed security purchases. And so we feel like overall that's going to be a non-issue. But there was a report of Fed governors that showed a survey of them actually forecasting where they feel the Fed funds rate is going to be over the next 2 and 3 years. And the general trend is absolutely the federal funds rate will go up, and in turn that's going to impact interest rates. So what's the message here, or the takeaway? And that is rates are going to go up. And I know I've been saying this, and I know everyone says, yeah, but they haven't. Well, they haven't, but every expectation is over next year and beyond we will see rates up. Next year the speculation was, if you look at it, the Fed funds rate would go, right now we're between 0.25%, and they're expecting it to go 3/4 to maybe as much as 1 to 1.5%. And so that in turn would mean an increase in interest rates. So keep that in mind, share that with your clients, and if they want to talk to me personally and get a little bit more insight, I'd be happy to do so. The most important thing here is to note that it's a great time to buy, and rates are awesome, and with this little correction this week, some people got a little scared, but overall, still a great time for a purchaser to buy or for someone to refinance. So if you know anybody that needs to talk to me, send them my way. I'll be sure to endorse you and get them going and ready to purchase. Now, I did send out an email this week about 2 brand new loan programs I wanted to just remind you of again. We have a new 85% jumbo loan with loan amount going up to $1.5 million with no mortgage insurance. And the rates on this program are awesome, really in the low 4s. You can't beat it. There isn't really no other way to get a jumbo loan with 15% down. So if you have anybody buying in that upper income category or upper price range category, send them my way, and I'll be sure and share that with them. And then I send out another thing about a brand new exclusive loan program for 3% down conventional money, no mortgage insurance, so 97% financing, max loan amount $417. There are some income limits of $86,500 unless the client is purchasing in a targeted area, and there are targeted areas in most of the counties around here. And again, I can help you ascertain that, so don't hesitate to give me a call. I've already received a couple of calls on that since the email went out. So good news all around. I hope you have a great weekend. I hope that helps, and don't forget, I'm never too busy to help you and for any of your referrals. I will talk to you soon.